Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Wednesday, the 22nd of January. Starting off with 7 Digital, which gapped up very nicely yesterday, just knocked on the door of the 200-day line, currently at 0.21. Today we've actually opened up above the 200-day line and making progress towards yesterday's high. Clearly on the chart, 0.25 is a key level. That was resistance in September and November, but at least while we're above the 200-day line, we could hit this October resistance line projection towards 0.33 pence or even more over the next few weeks, especially while we remain and hold above that the 200-day line area. Of course, if you're cautious on the stock, maybe wait for a clearance end of day close above 2.25 before getting involved on the long side. Stock which has been quite a journey, obviously in the recent past, is Cloudbuy. Complete horror story, really, is probably the best way of describing it. But just a little interesting charting thing to look at the moment. Very, very oversold here, the RSI under 20, which is normally interesting, at least from a technical perspective. That's extreme oversold, and even in the worst situations, there can be a positive reaction from that area. We've also broken this mini resistance line here from, I suppose, the last week, 10 days. That runs around towards the 0.4 level, and an end-of-day close above that could mean that we see at least a token attempt to retrace some of that horrible gap down from earlier in the month from, what's it, 2 pence plus, opening at a penny. So maybe, half split the distance there, 0.6, 0.7 pence, something like that from current levels could be seen, even if the shares then fall away after that. Slightly better situation to look at as far as Dot Digital is concerned. Here we've got a nice breakout through 105 pence, the initial resistance of January. We're also trading in the run-up, likely run-up to a 50-day, 200-day moving average golden cross buy signal. That's traditionally the strongest part of the technical cycle, and that's certainly the case at the moment. Shares in a vertical move to the upside. And the view here is really that while we're above 105 at least, the target here could be towards the top of a rising May trend channel heading towards £1.35. Just a little bit of resistance there coming in through at around the 115 level, 114, 115, but an end of day close above that, and we should head off quite quickly towards the nominated target. On to Codelco, which I've covered now and again on the website, on this podcast rather, not the website. Here you can see that the shares have broken near-term triangle from the end of November at 0.04 pence. That's also the area of the 50-day moving average. So while we hold above that, and if we hold above that, then there could be further upside. A slight pullback from 0.054, which was the old November peak, but at least while we're above that 50-day line, best case scenario over the next month or so would be a retest of October resistance at 0.07 pence. Good news today, and a good charting move for metals exploration, which has been a rather sad situation over the course of the beginning of over the summer period, but it's started to recover now and in recent months, and we've got a rising trend channel that you can draw from as long ago as February last year. Top of the channel there running towards 2.2 pence. That would also retest the initial resistance of last year, and the gap up through 1.5, very encouraging indeed. While we remain above that level, providing we close above that today, 2.2 pence looks to be the target over the next month or two. Moving along to a stock which has risen today and is intermittently in focus here on the Bulletin Board Heroes, largely as a potential recovery situation. We had that spike for Mitre Tech earlier in the month, and one earlier last month as well. But it looks like we've got a rising trend channel that you can draw from the end of November. Floor of the channel running at today's low, around 3.25 pence, and holding that, we could head towards the 200-day moving average at 5.29 pence over the next few weeks. I suppose the ultimate stop loss here would be the 50-day moving average at 2.93, only really back below that, and the early January gap would cause alarm for the bulls. Petrol Resources, a perennial favourite as far as the Bulletin Board Heroes is concerned. Obviously, we had that wonderful move in November, and then the double top at the end of December. Rather painful gap down since, but currently hovering around the 200-day moving average at 5.95 pence. Probably want to see a clearance of near-term resistance, this resistance line from the beginning of the month at 6.2 pence on an end-of-day close basis, before the shares have a chance of trying to fill that gap up towards 12 pence. Stop loss in the near term actually just back below 5 pence for these shares. On to strategic minerals, where things are looking encouraging, let's say. We've got a potential break of this line of resistance from the middle of the month around the 0.75 pence level. End of day close above that could be the first trigger as far as the stock heading towards the top of a rising trend channel from the beginning of October, which is level with the 200-day moving average at 1.09 pence. Stop loss on the whole buy situation here, really back below the 50-day moving average. That's currently at 0.63, but the shares have held that particular feature really since the end of December quite well, with 3 support points above it, so that does give us some confidence. Finishing off with a rather obscure situation that's coming in the form of Samara Enterprise. Here we've had a very encouraging gap through the 200-day moving average at £2.63, and while we hold above the gap floor around that level, looking for a top of November price channel target as high as £3.20 over the next few weeks. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.